Greetings, I'm Nick Batsford, the CEO of Core London. I used to basically trade markets for a living. I was a hedge fund owner, a trader, and indeed a broker, all in different parts of my life. Today, I want to talk about a key chart that's come across my desk and using point and figure charts. Let's kick off, a recap on point and figure charts. They're designed for long-term investment. Now, you can use them short-term. When I used to trade on the life floor in London with my red jacket on, you could do intraday stuff, but I think their strength is basically the longer-term investment theme. They give you solid entry and, more importantly, exit points. It's very easy to get into a market, but in terms of exiting, when to take your profits or indeed your losses is a little bit more tricky. They monitor supply and demand. You can clearly see areas of support and resistance. The X's basically are rising prices. The zeros are falling prices. Support and resistance levels for me on these type of charts are more clearly defined. You can basically pick out lows and highs. So I think they're much more interesting than other methodologies. Now, what I want to highlight today is the 45-degree line. You can't basically fiddle that. It's a straight 45-degree line. And on this chart of the S&P 500, it's acted as support since March 2009. And more importantly, it's held 3 times. So we know this is a level that basically market participants are looking at. The levels themselves, the support level around 23.71. As I always say, technical analysis is not an exact science, so you're looking for areas of support. What constitutes a break below this 45-degree line? Well, basically a close, and I repeat, a close at 23.47 constitutes the break. And I always look at closing prices as opposed to intraday price action. Now, an ascending triangle line is called a bullish support line. Represents a specific rate of ascent. You'll see that basically in terms of that line, in theory, price and time are in perfect motion. Obviously, the markets up until a month ago were extremely frothy to the upside, and now we've had a relatively aggressive pullback. Now, I'm not suggesting this level is going to be the bottom of the move south, but this is an absolute key area for me. I've looked at point and figure charts for decades, and these 45-degree lines, for whatever reason, have an uncanny knack of holding up the sellers. So I'd be watching this before I made my next move, whether that's on the bull or the bear. So just to repeat, support around the 23.71 area, a close below 23.47 would constitute a break of a very, very key support line in the world of point and figure. Thank you.